Welcome, welcome, welcome. Nicholas Conti here representing King Visions Forex, back again at you guys with another video. Today we're going to be covering multiple time frame chart work or analysis. I think this is going to be a great topic to dive into, allowing us to actually identify key areas in the market where we may want to facilitate or participate, trade. So without further ado, we're going to jump into this. Now, multiple time frame analysis for intraday trading. Couple of key bullet points we're going to cover is what is multiple time frame analysis, understanding the trend with multiple time frame analysis, how to actually use multiple time frame analysis in your everyday trading, and some of the key advantages of using multiple time frame analysis. Now, multiple time frame analysis, otherwise known as top-down approach. First, we have listed some of the things that it can help you battle, like would be tunnel vision. Traders always should also have an understanding of the overall market environment and not just one time frame. So it's gonna help you guys overcome that. And I also like to ask, have you guys ever found yourself taking a picture perfect setup and on that primary time frame chart, only to see it not work and actually stop you out? So these are some of the things that we can combat using this multi-time frame analysis. Some of the advantages of using the multiple time frame that we'll cover will include allowing the trader to get a micro view of larger time frames, which can in turn confirm the trader's original analysis of the trade. It's like using a backup pattern and fine-tuning your entry. An example would be having a pattern on a 60-minute chart, using the 5-minute chart to actually confirm that pattern are working from top down. Now, risk can also be managed more effectively by combining time frames. A trader can learn to move stops on smaller time frames for patterns that complete on the larger time frames. So give you guys a little bit of advantage of risk management and actually, moving those stops, protecting that profit, things of that sort. Now, using multiple time frames from top to down can help the trader be aware of contrary or opposing patterns that form on the smaller time frames that are actually against the larger time frames. So we always look at the larger time frames as big brother. If the pattern from the smaller time frame are against the larger time frames, we generally want to go with a larger time frame pattern. It's going to be stronger and more of a complete pattern. So we work coherently in and out of different time frames to actually build us a broad perspective of how we want to facilitate trader or be active in this market. Now we're going to take a look at a couple of examples here, and we'll actually give you guys kind of the steps or the routine we use to take advantage of 3 time frames that we're making decisions with. Now, the higher time frame or HTF, we typically or generally use the daily. For the intermediate time frame, we're going to use the hourly. And for the actual entry or the trading time frame, we're going to use the 15 minutes. So for the rest of this presentation, you guys will hear me, refer to them as HTF, ITF, and the TTF. Now, on the higher time frame, or the HTF, otherwise known as the daily, we're actually going to be using this time frame for a market overview and actually to select the particular currency or asset. Now, over here to the right, we have a few tips or few guidelines we use for identification. Now, step 1, we're going to use the higher time frame to identify support and resistance or supply and demand. Step 2, we're going to be looking for an actual trend channel on this higher time frame or this daily chart. Also, potentially a demand and supply line. Now, step 3, we're going to be looking at the overall sentiment. Now, sentiment is the overall attitude of investors towards a particular security or a financial market, or the actual crowd's psychology. So it does play a part. Step 3, last thing is going to be our high time frame signs of strength, and also the higher time frame signs of weakness. So you guys stay tuned. We are going to be diving a little bit more detail in some of those topics, like the SOS, SOW, different models and different things we can use in our trading to come to a conclusion of which way we actually want to trade in this market. Now we're going to take a look at these few charts at a different perspective. We're going to start off with our bird's eye view, or our daily, or our HTF. If you guys can see here, we do have our trend channel here. We have a couple of resistance and support lines drawn out. We see that this actual trend line is reacting or supporting this market. Next view we're going to have is going to kind of show the example of step 2. We're actually going to be identifying the supply area, and we also kind of see that it is struggling to move apart above that actual support area. just to rewind, higher time frame or step one, we actually identify the support and resistance. We actually even have our supply and demand zones. Step two, we're actually looking more into the trend channels, verifying if we have any supply and demand. Now, it's going to be an example on three, what we're actually looking for as far as an entry signal or some of the entry reasons that we'll see on the higher time frame. We're starting to notice there's a lot of higher wicks. We got a pin bar candle structure, and we got a nice drop followed by that. So there at the bottom is some examples of the bullish pin bar, also a bearish pin bar. We look for some of these certain things on the higher time frame and wait for our entry to come up on a intermediate or our actual TTF or entry time frame in order to get confirmation to take that trade based off of those pin bars. So now we're going to move to the intermediate time frame or the ITF, which will, in our case, will be the hourly. Now in this time frame, we're going to actually define the structural work within our trading time frame that the price action could possibly move. Now in this time frame, we'll be identifying trend and marking off the nearest supply and demand zone. Now we're going to analyze the above three charts in the intermediate time frame and see what we can actually see. Now here on the ITF, the trend channel, we actually see our supply and our demand zone. Up here, you can actually see the daily view. So you can see how this daily is going to be more like a bird's eye, and it's going to be more like a microscopic view. Now the markets are fractal, so the smaller time frames work their way up to the higher time frames. As you guys can see, some of these patterns repeat themselves from time frame, from day in to day out. So we have also, lastly, our supply line here. So we see we came from supply, broke down, and we actually broke the supply line, pushing us up higher from this particular demand zone. And this example is going to be a little bit more zoomed in so you guys can see some of the resistance areas. We have the supply zone here. We have the demand zone. We also see that the trend line or the trend channel actually held up in this demand zone, giving us a nice bounce. Last example here is going to be more defined before we had the actual bounce. So to show you the supply zone, show you what price did when it came up into the demand zone. We get a clear chart pattern here, or we start getting a rejection, forming a candle that's giving us an indication this thing was ready to rise. Okay, last area here, our last view we're going to take. So we've been working our way in, our zooming in from the daily to the hour. Now we're going to be at our actual trading time frame or our entry time frame. There is a brief typo, but we're going to be using more than 15 minutes instead of 5. Now, we'll actually use this trading time frame for the zones that we already previously selected. We use it also for entry, exits, and stop loss placement. Now, how we actually select these zones that we're going to facilitate trade is we're going to be marking the nearest supply and demand zone. Also, we have a video coming out for better understanding, going over supply and demand zones exclusively. So you guys stay on the lookout for that as well. Step 2, we're going to be finding where did these zones show, or where did price respect those actual zones. Now, if the trend is up, and it's going to be kind of a key thing here, if the trend is actually up and we're approaching a supply zone, we want to avoid those long trends. We become sellers as the price at that supply zone, or we can wait for a clear breakout from that zone, i.e., any type of pin bar, any type of engulfing. If you guys are using like RSI to solve a ball, Bollinger Band, EMA crosses, anything that your actual particular strategy calls for an entry point or an alert for a signal, you guys can wait till after we hit that supply zone and then execute using your actual strategy. Now, if the trend is up and we're at a demand zone, we're going to be looking for an opportunity to go long. And eventually I'll show you guys an example of that. So lastly here, if we're in the middle of the trend, we can go with the intermediate trend and actually facilitate that trade. So we're looking at the 15-minute and we're seeing kind of choppiness. We look at the overall direction of the big brother or the 1 hour, which will be our intermediate trend. So let's go to the actual trade, that actual time frame. So we see here on the intermediate, we're going to be showing us working down into that actual trigger time frame. So here we have the hour chart. We're sitting at a supply zone. we've seen previously the clear break of the supply zone, pushing price higher. So one key puzzle out that we're going to be looking kind of long at this point. We see that this is moving up. It is in the supply zone, so we're not going to be just taking the trade straight off right now. We're going to wait for some other key factors. We do notice on a daily we are still in an upward trend, so we're going to wait and be patient and let the market decide which way it wants to go. So we could have had a key entry here after we had the break of the supply line. We're going to show more definitive of that. When we came from the supply, dropped down, we got to the actual demand zone, previous tested area, we pushed up higher. Would have been a great entry here for a trade. A nice amount of pips, looking along, a couple hundred pips we could have caught from this hour chart, and we would have got our entry from our trading time frame or the 15 minutes. Would have seen a nice engulfing here, nice engulfing, pushing past some of these candles. Last couple of examples here. We have example of the pin bar on the smaller time frame. So you see that we got price trapped here. The upper wicks, nice drop here. See the supply zone. We see price come down. It's actually going to be a 15-minute chart, if I'm not mistaken, or our trigger chart. We see price came right down, gave us a nice wick, starting to show rejection at the demand zone. We take the trade long. As you guys know from the previous example, it broke through, pushed us all the way back up for a couple of hundred pips. Now, this actual chart here is going to show the 15-minute time frame. Once again, it's going to show the actual demand zone. It'll show how price touched, bounced, gave us a nice entry for that trade. And should have one more. Another thing I did want to show you guys. Fortunately, I didn't add that slide, but I can show you an example from this one here. You guys see far to the left, we want to show you guys what we call a flip zone. So similar to support equals resistance, we have clear defined a demand zone here, supply zone up here. We see price come up, rejects off of the supply zone, comes back to a previous level. Also, you see the EMA work here, bounced off of this 50 EMA, came up, retested the zone again. At this point, this is what we call a flip zone. It's going to change from being a supply to an actual demand, pushes up further, comes back, retests the actual demand, pushes up, kind of plays around, gave a little inducement trying to get sellers to come into the market, and then we get a nice push up. So from the actual flip zone, you're looking at about a 200 pip trade as well. So you guys would have caught a nice trade. Again, identifying some of these supply zones before they happen, because anybody can show 2020. We want to learn how to trade this right side of the chart. So this overall concept is why it's pertinent or important to work from a top-down approach. You guys can take some of the daily areas, and it gives you more of a sample size of time where you guys can mark off these supply zones, and they hold true in the future. So what I did was I marked off a supply zone on a daily. Didn't have all this information or these candles above it, but I did realize that price has stopped here or reacted here before. So once again, we always start at the present action. We're going to look to our left. We're going to look to the past in order to predict or to actually analyze what could potentially happen in the future. So once again, this is Nicholas Conti representing King Visions. Hope this did break down a little bit of how we're actually working through multiple time frames. Key points, once again, is to work your way through these different time frames. A couple of things here we left you guys with today is identification of things you guys can identify in the market to give you a proper or sharper entry. Last thing I can say, bird's eye view, then you're zooming yourself in, and you can also work coherently, or you can actually move from the smaller time frames or the trigger time frame and work your way up to kind of identify which way the market's flowing and which trend or which way you want to actually interact. So once again, Nick here, King Visions. Hope you guys enjoyed this walkthrough. Stay tuned, like, share, comment. You guys have a great day.